Now, 2015 may not have felt like a great growth year, but economists are bracing for faster growth in the new year. A CNBC-TV18 poll shows that respondents see India's GDP growing by at least 0.5% higher than the previous year, closing in on the 8% mark, and inflation cooling off to 5% by FY17 end. Ritu has the details of the CNBC-TV18 economic poll.
India is poised for a higher growth path in 2016. That's the verdict from India's top economists polled by CNBC-TV18. The country's GDP growth may touch 7.5% in the current year and further pick up to 7.9% by FY17, provided monsoons do not play spoilsport.
External headwinds are going to remain for India. The positive side for India is that we are seeing some early signs of a cyclical pickup. Growth will possibly be marginally higher in 2016 compared to 2015.
CNBC-TV18's poll shows that consumer price inflation could remain around 5.5% by March 2016, but then cool off to about 5% by March 2017. But even with inflation under control, the mid-year review of the government shows that the best chance of kick-starting the growth engine would be through higher public expenditure, which in turn may hurt India's fiscal deficit. The respondents expect FY16's fiscal deficit to be maintained at the promised 3.9%, but with the effects of higher wages and a potentially higher public expenditure bill coming in, the poll shows that fiscal deficit for FY17 may be closer to 3.7% than the 3.5% projected by the government.
We should completely desist from not reducing the fiscal deficit if it is because of public consumption increase. However, I think that if indeed we can step up public investment, both in the railways in particular, we could possibly consider slowing down the path of fiscal consolidation.
As for the other parameters, our respondents expect the Indian currency to strengthen against the dollar, expecting it to touch 66.3 by March and depreciate to 67.5 by the end of 2016.
Will the Reserve Bank of India be able to support this growth? While 40% of our respondents said they expect a 50 basis point rate cut in this fiscal, 60% said they only expect a 25 basis rate cut by the Reserve Bank in the entire fiscal FY17. So while 2016 definitely looks out to be better than 2015, a lot will depend on how the external environment pans out. In Mumbai, Ritu Singh.